Real Estate and Finance Show on your hometown station AM 1220. We are here with our very good friend and investment advisor Nick Lentini with Lentini Insurance and Investments. He's backed by popular demand, and we do not want to waste any more time because we've been going over, I have a list of items that Nick is an expert at that we are not, and that's why we align ourselves with the best of the best, and that's why we're proud to be part of the professional resource group. Nick is our chosen insurance and investment advisor for our group because he is accountable. He's accountable to us. He's accountable to you, being part of the Don and Gino Real Estate and Finance Show. He's part of the professional resource group, and he's been part of the community and his family for 50 years. And why that's important, we were talking about right before the break about how we are having to fix a lot of mortgage loans and help people out of situations because the banks, unfortunately, are not as informed, educated, experienced, whatever you want to call it, and you may have a different person every time you go to the bank. It's the same thing in Nick, in your industry, right, Nick? Because I know there's a huge difference between how we approach a client versus how maybe an institutional lender may.
Well, Don, you're absolutely right, and I think the key is using the bank. Another example is in my world, online trading.
Like
there's
online
a lot
lending,
I can't
yeah.
mention names, but as far as different online services, there's a big push to do it yourself. There's no relationship. You never know who you're going to get on the phone if you don't have a professional you're working with, and there's value added for that. Yes, it does cost you money. It costs you money on both sides of the fence, whichever direction you go. But having that relationship, because an individual that you sit down, you meet with, and meet with face to face, there's an accountability there from the broker to that client and to his wife or her husband and their kids, and also a continuation that is not there, that gets dropped a lot. The ball gets dropped a lot where in our business, upon succession for that family as well, it's not just a relationship with that client, it's a relationship with his wife and their children and their successors as well. Mm-hmm. So you have a generational building as well, and you're not going to get that over the phone. And it's the same with you guys as well in your business. So in also having the needs addressed, not only of that investor or client that's in front of you today, but also the needs and goals of their successors as well. I think that's a very important part of the planning process.
Yeah, absolutely.
It's huge.
Yeah.
And so I think that gets missed. And dealing with an employee versus dealing with an owner or someone who has a vested stake in that, the doors opening of that business day in, day out is a very big thing. I think it's a very important aspect.
Yeah, really good stuff. In fact, the one thing I did hear, though, is because I know sometimes cost can be misinterpreted. Because you say, yes, it's going to cost you to have a professional. I say it's going to cost you not to have a professional.
100%, Gino. Yeah. I love that.
Learning from your mistakes is costly.
Yeah. Or poor advice.
Well, exactly.
How costly is that?
And it's and that happens a lot. That's one of the, we're going to talk about red flags. Red flag is trying to go at it on your own, and there's nothing wrong with that. Some people are very into doing that, but have a balance in your portfolio, have a balance in your advice. I have clients who go it alone on certain parts of their portfolio, but the parts of their portfolio, which is generally the bulk of it, that they want to make sure is protected from down markets and have the ability to capture gains in the good markets, and having the balance portion of it, they're relying that to a professional, and sometimes not only with me, with multiple brokers as well. But they'll take a small percentage of it, and hey, go ahead and go to E-Trade, go to Ameritrade, go to an online brokerage firm and do that. And I advise that sometimes with, hey, you want to do this. This is where you want to have an allocation. That's not really my forte. That's not my strength. I have no problem saying that. Go do that. Let's just make sure and have it accounted for as part of your total portfolio. And that's also another red flag when meeting with a financial planner, an investment advisor. Make sure the questions you want to make sure they're accounting for all of your portfolio. Make sure that you're disclosing that, because they cannot do a thorough job if you're not giving them all the information. And the only way to do a proper planning for a client is to make sure you have all the cards on the table and look at everything and address the goals and needs. Hopefully that answered your question. I went a little long on that,
it was great. In fact, I hope you're listening to Nick Lentini, because he just gave you the secret of building wealth over time and passing that on to your children, which hopefully most of us want to do. And to me, what I was hearing is make sure you have balance. And it's very easy to get emotional with money. And we see it every day, right, Don?
Yes.
And the reality is,
needs versus wants and all that good stuff.
I see a lot of emotion right now in our current environment. I see, we're talking about the S&P 500 breaking all records for the best growth they've ever had in the beginning of the year. I believe you have some numbers on what type of growth we've seen in the beginning of the year. My personal opinion, unsustainable. So be careful, make sure you have balance, and like you mentioned, if there's a portion of your portfolio that you want to opt to control yourself and invest yourself, that's okay. Just make sure it's not your whole nest egg.
Absolutely, and just for example, I completely agree with you, Gino. I think is the people tend to ride the wave, and they tend to listen to people on the radio. Don't hit me, guys.
Hey, we bag on the media ourselves.
To the media.
Don't worry about it.
Let's be realistic. People that are on the radio having these financial shows, people that are out there. I'm not going to mention names again. That are out there. Certain people selling books. That are on MSNBC or Fox Business Channel.
Hey, it's why we started this show, is because we're against that.
Well, it's a matter of they're talking in generalizations, and it's show business. And I look at it as show business. They have no concept or clue what that individual or any one of my clients' needs or goals are in addressing it for their financial plan. So, you get these people who are out there on their soapbox, so to speak, and they're thumping, do this, do that, do this, do that, and they're following trends as well. And have had a number of people come to me and say, well, I was following this guy's advice. Well, I just found out that the guy giving the advice isn't doing his own thing. He's not following his own advice.
Sure.
Let's sit down and talk about, and this is a gentleman I've known for years, and we sat down and we put a whole different approach to it. And it's difficult for people. They get a mindset and to kind of, let's try this. You don't have to jump in with both feet. Let's work into it. But going back to what Gino was saying on the market, is this sort of growth that we've seen in the first roughly 30 days of the year sustainable? I don't believe so.
I don't either.
But working with my clients, I make sure, as well as any of the good planners out there, are putting together a solid, balanced portfolio to give them protection from the downside, capture the gains on the upside, and making sure it's balanced to the client's objectives, and dialing in with that. And we're seeing good growth. We've got reports coming out tomorrow. We'll see how things lead into that. There's a lot of unforeseen out there in our local national econogoing and also going globally. There's going to be hiccups in the road this year. It's going to happen, but it doesn't mean you should sit back and pull your money into fixed, because a fixed income is not an investment. It's not an investment strategy. It's not an option. You need to have something in growth, and having it canvassed over multiple markets. Small cap, mid cap, a little bit international. There's opportunities in all areas, and being able to navigate that's important, and that's why you need a professional, because nobody can do that on a part-time basis.
Impossible.
And it's hard to do on a full-time basis. And no brokers know everything. Not all brokers know everything.
I know that was one of your red flags. They say, I know in our business,
nobody knows anything. Any guy who's afraid to pull back and say, I don't know. But let me find the answer. If you see that when you're sitting down with someone in any business, that's just common sense on that. If someone says, you can tell when they're dancing around it. If they're not sure, hey, I don't know. Let me go find the answer and get back to you on it. People admire that more, and I've learned that over the years, and it helps build a solid trust in a relationship.
Well,
we
trust you, Mr. Lentini. We got
thanks,
Nick Lentini with Lentini Insurance and Investments right here in Newhall for almost 50 years now. Nick's been in the industry for 22 years, sharing with you tips about how to protect your assets, how to grow your assets, and tips and tricks and also red flags in the industry, because I know in our industry, in the lending industry, it is very tricky. It makes a huge difference whether you know really what's going on. A lot of our industry, Nick, we had a lot of people that were doing it part-time, and they gave poor advice, and it cost people their homes, it cost people
marriages.
Yeah.
We know. I mean, realistically speaking, you put people, when people have problems in their finances, everything falls apart.
Very true.
And I'm sure it's caused problems with their children, and so
stress.
Just the cost of bad advice is so much greater than the cost of dealing with a professional that's going to make sure that, none of us want to have these, well, at least I don't. I'll speak for myself. I don't want to have extreme volatility in my life. I would rather have smoother curves. I'd rather have a little less appreciation and a little less depreciation when things go down, because I just don't need the stress. I don't need the stress.
No peaks and valleys, just rolling.
There's enough stress trying to make a living, manage your family, get to the gym, like Don was saying. But if you don't need to go it alone. And
well, you bring
ease
of mind. What I really like is because, and I'll talk more about this in the next segment because we only got a minute left, and don't leave because we're going to go into some great information, like common mistakes that most investors make.
One thing I want to hit on before, and we can do this after the break, is Gino was talking about the cost, and I want to hit on fees and cost when we come back for sure, because I think that's real important.
That is real important. It's how do you pay for your services? How do people pay for services? I know there's multiple ways.
What's the value of paying a fee? So sorry, Don, didn't mean to interrupt.
No problem.
You brought me in.
Yes, we did. We brought Nick Lentini with Lentini Insurance and Investments to help guide you to personal financial wellness. That's our goal. That's Nick's goal. Good friend of ours. Please don't leave, because we got two great segments that we're going to go deep on some subjects you need to know, because these are life-changing topics that we're going over. So don't leave. We'll be right back on the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220, KHTS.